Good morning, Mr. Greider.
Hey, good morning. And good
How you doing?
afternoon to those on the East Coast as well, right? So we start
Absolutely.
at 10, but it's 1 o'clock on the East Coast, and appreciate everybody joining for our monthly webinar.
Absolutely. Let's go ahead and get started. This is our August webinar series, everybody. Welcome. This is bank statements for the self-employed borrower. So let's go ahead and jump right into it. As always, here is our disclaimer, and thank you for your support. We have a pretty full agenda today. Everybody can see that we have a special guest on. We have Sarah Walker, who is our Director of Marketing, and she's going to be doing a live demo for bank statements in a little bit. And as always, everybody on the call will receive a copy of this presentation, as well as the recording and the slide deck. Again, my name is Andrea Formato. I'm the Sales Training Manager. Thank you. Welcome back, Mr. David Greider, our SVP of Wholesale Lending. Before we get into self-employed, what is self-employed, David? I think you had a couple fun facts that you wanted to share with the group today.
I'm sure everybody that's on this is kind of tuned to the CPI, and the mortgage rates, what the Fed's going to do. And when I was looking at the report today and looking at some of the categories, I saw there's a really good category, some good news and one not so good. So one thing year over year that decreased 10.7% is one of the major food groups, and that's bacon. So that went down 10.7% year over year. So breakfast is back on. I'm telling you, it was really getting expensive there for a while. The one that kind of went negative was the other food group that it's there. Food from vending machines. That went up 14% year over year. So when I look at the difference between 14, 10.7, 3.3, oh, by the way, the CPI went up, 3.2 overall. So just take those two categories, and we got a scientific methodology to know what it is year over year.
That's it. Bacon.
I guess that's good as any. But anyway, the good news
bacon
is
back.
Went down, right? And I'm hoping that the Feds will maintain and not increase rates going through this. And we're all gearing up for 2024 and 2025 when we'll see, which I predict, some rate relief and getting back into maybe the conforming in the mid-5 range, maybe in Q2 next year. With that, let's get started on bank statements. And again, this bank statements was your guys' request, and we appreciate your feedback. So any type of topic you would like for broker webinars, please send those up to myself, Andrea, or to our marketing department.
Excellent. Thanks, David. I will go ahead and continue with the slideshow. And I have a couple polls, as you know, I love to do. So I'll let you know when I'm ready for that.
Awesome. Okay. I'm just kind of just go through what is self-employed. It's definition of 25% or more ownership in a business. That is the definition. So in order to qualify for alternative income documentation, which there's several, you have to have at least 25% ownership in the business. If you own 24.9, you can get approved through paycheck stubs, W-2s, those type of things. That is the method. But when I looked at all the businesses that are out there, and there's a lot, and we see them all the time, every day. So I just want to kind of highlight what you're looking at. DBAs, doing business as, right? So you'll see a lot of that where it may not have formed anything. It's just a sole proprietorship, right? LLCs, there's been a lot coming in lately that they own LLCs. Partnerships, corporations, right? S corps or C corps. 1099 is considered self-employed. Other forms of independent contractors and gig workers, I kind of threw in there, where they take jobs periodically. Sometimes they're 1099, sometimes they're W-2. They're just going through that, but it's a type of position where you just take jobs throughout the year. And we kind of understand that here at Home Express, and we value every loan, and we look at each loan based on its own variables, right? And so a lot of these that you might think, hey, this is too hard to put together as far as the income documentation piece, because you think there's gaps, or maybe that, obviously the tax returns aren't going to work. So tax returns were going to work. You'd probably go the conforming non-conforming ways, or maybe it's a little more difficult that way. And by the way, the rates on non-QM bank statements are just as good as full doc generally, right? It might be an easier way to go than grabbing out 2 years tax returns when they have very complex tax returns to get done. So with that, we'll just go on to the next slide here.
Okay, but before we do that,
Oh.
let me just see here if I can get my first poll going.
Okay.
Okay, can you see that, David?
Yep, I can see it.
Okay, here's our first question, everybody. What percentage of US workers do you think are self-employed? This is going to be an interesting one. I see you smiling, David.
Yeah.
It's we're gonna get the answer here on the next slide, but we'll see what everybody thinks. So we'll give it just another couple seconds. We've got 10%, 25, 50, and 75. I was a little bit surprised too, actually, at this stat when I was first looking through it. All right, just a little bit longer. I think everybody has answered. So here we go. We're going to end the poll and share the results. So can you see them?
Yeah, I can. I was a little surprised too. And
Yes.
this is probably, I mean, it's a good percentage, right? And I think 25% would probably be the most one chosen. And again, the 25% might have part of that because they're thinking of what's really being reported, right? But as of the Bureau of Labor Statistics, 10.1% of the workforce is currently self-employed as of January 2023. That's about 16.2 million people. And this is just from that source. And if you looked at a household today, there is probably some form of looking at other ways to increase the revenue with the high inflation. And there probably some side jobs are doing in that maybe not be included in here. But this is from the Bureau of Labor Statistics. But you can see that is a large amount of individuals out there self-employed. And how do you take care of those individuals that have the need to buy a house, to refinance for tuition, or for cash out for increasing their business, or business expansion, right? So I think even though it kind of seemed a little bit of drop, a little bit, but I think it's going to be consistent, and that 1099 gig work is here to stay, and so we're able to navigate that very well here at Home Express. But it's a great thing. So as we start out going through the income docs, I know this is on 12 months, or bank statements for a self-employed, but I wanted to kind of share with you, there's a lots of income documentation types, right? So I kind of go through at the top around this for the self-employed borrower, right? We have 12 months, 24 months bank statements, which this topic is on this. 1 year tax returns could also be one. We also have a 3-month bank statement program with a profit and loss statement. We have a P&L only, K1s only, 1099s only, and asset programs. And there could be a combination of this. However, there's really 2 programs that make up, I think, the largest percentage of non-QM loans, right? And the one we had is on our topic last month, and that's on the investment products, right? Probably more specifically, debt service coverage ratio. And the second one is 12 months business bank statements. And that's where we're going to concentrate it here, right? I can come out and go through all these programs with you, and it'll be 2 hours. You're still going to go, hey, well, what is that? So the biggest point on this is kind of understand what the majority of the non-QMs fall in, and then to make sure that you're aligned with a great non-QM AE here at Home Express that can work the deal with you, be able to structure that loan based on that borrower's and that self-employed borrower's situation and their accounting methods and what they have available to get approved.
Thank you, David.
Yep.
Sorry, I have another poll before we go on to the next slide here.
Love it.
Okay, let's go to my next one, which is self-employed history. Can you see this one? Hold on. Here we go.
There it is.
True. Okay, here we go, everybody. True or false? You have to be employed greater than 2 years to be considered for a loan at Home Express. This is a good one.
This is
Oh,
a good one.
hold on.
I can't vote though. It says right on the
I
box,
know.
those in towns cannot vote.
Oh, true or false. Oh, everyone's coming out pretty strong with this one.
Okay, I love it.
This is great. Love the interaction here. We're going to give it just a couple more moments. And again, while we're waiting, I see a couple questions coming through in the Q&A, so please feel free to put your questions in there, and we will get to them at the end of the presentation. So thank you for that. Okay, let's go ahead and end the poll, true or false. Well, Mr. Greider?
Wow,
Uh-huh.
false.
That's
I
it.
love it. That is great. So they kind of know already, right? So
They kind of
the
know.
message is out there, but that is true. It is false, right? And so when we're looking at the most common 12-month bank statements, down below you have the myth, right? Must have 2 years self-employed history. We do have programs for less than 2 years self-employed, and we call that our cash flow program. And that's for individuals that are typically W-2'd at managerial supervisory type of position. And then it's got to be greater than 1 year, but then open out and go into the self-employed arena in that same field, right? We're able to look at those. And the most common example I give is the doctor at Kaiser doing his residency, and then 15 months ago starts his own practice. The first 2 to 4 or 5 months or all this ramp up, lots of expenses going out, getting this book of business, then you can see the cash flow of it going up. And typically those borrowers have great credit, good money down. They just don't fit traditional underwriting with the income document from the conforming world. Also, we have W-2 to 1099, same line of work. We've seen that a lot over the last 2 or 3 years where they changed or maybe they moved to a different location, remote work, or now they're 1099, but it's really the same company when they have no additional expenses per se for that. It's just a change of pay type. And we're fine with that as well, right? So keep that in mind as going there. But how do you calculate income? We can go back to the other side. I just want to kind of talk a little bit about the top of going through this. We're going to look at the qualifying deposits, the business questionnaire, some of the expense factors, and then tax accounts letters on this. So let's go to the next slide, probably go through more here. The goal when you're looking at, qualifying deposits of the business is we want to determine the business receipts or revenue that are consistent and predictable, right? And a lot businesses all run differently. Some are, get daily receipts, weekly, monthly, quarterly, or some type of seasonal type of business that they run. Maybe most of their revenue comes in the spring or in the fall, right? You kind of see that through some of the agricultural type of businesses that we have out there. It's really just trying to decide, okay, we can see the 12-month bank statement, we kind of understand that the consistency is there and it's predictable to go into the future. The principles of income are the same, whether you're W-2, self-employed, going bank statements, right? You have a look back of like 2 years of like, hey, that all makes sense. And that is going to go forward and continue so we can make a good loan decision. And so when you're looking at the revenue on a particular business, we understand the concept of why people go self-employed. And I kind of restate the obvious, like, hey, they could take advantage of some of the tax write-offs they have. And therefore, if you go to the tax returns, probably don't work, right? But if you can use the business bank statements and the concept of retained earnings that they keep into those business bank statements, right? Because they feel like they pull it out and go into their personal or do something with it, they create a tax event. So the retained earnings that stay in there, we understand that they're able to pull out income if they decided to do that out of their self-employment positions that they have. Some of the challenges that we do see with this is that in 2023, it's a different world than it was 20 years ago. I have a degree in accounting, and I remember going through accounting 101 and how to start a business. And I say, hey, you form your business operation, doesn't matter, LLC, partnership, or some type of DBA, you go get a business account. Okay, so you go down the bank, get a business account, And then you deposit all your revenue from the business into your one business account, and you pay all your expenses, salaries, cost of goods sold, and you come out with your net profit. And the net profit, then you transfer over to your personal account, and that's your income. However, that is not true today as far as that goes, because there's so many avenues of getting paid, right? Venmo, right? I actually pay the person who kind of services my pool and my yard through Venmo. That's their preferred method. Now, if it's a big job, they might want a check, right? So they're depositing checks into a business account. They're going to Venmo over here, maybe PayPal, maybe Square. Really depends on the business, right? That's why as we go through this, we're going to show you on a questionnaire trying to understand that. We're trying to understand where the revenues come in so get it consistent, predictable. You might need a combination of those. And the more that you provide us on that, we're able to use more income and be able to qualify the borrower on DTI even more for what they're requesting, right? The other challenge we have is large deposits, right? That seem out of the norm, where you need more explanation. We're not saying no to that, but if you see something where it's consistently, I'm getting $5,000 an average a week, then all of a sudden 1 week you get 100,000, that's out of the norm, which needs to be explained, right? Maybe it is income from the business, maybe it's not. You just need to kind of understand that would be an obstacle that we need to overcome, be able to use that by understanding that's part of the business revenue. And then the unique counting methods kind of went with that. Some people just put all their income they have into one account, pay all their personal expenses out of that account, and you're just kind of like there. So with that is that we understand that there's some personal debt that can be paid out of the business, and we don't want to hit them twice on the DTI. So if you see car payments that's on their credit report that's actually part of the business, we're able to deduct those out to help the DTI out. So there's kind of challenge. And the biggest thing for you guys to understand is that, hey, we can get these done. We have technology to help you out, and very highly trained account executive. It will structure this if there isn't. But typically, when you go through the 12 months business bank statements, you're going to get a result that's favorable, and you're just going to get on through with that. And we can do that upfront from you. So we go to the next slide, and we're going to go through some of the factors needed. We need the 12-month business bank statements, right? But our goal is to apply the most reasonable expense factor based on the business, right? We all understand that if I'm a IT tech, that I'm 1099, I work from my house, right? Not a lot of expenses. I already got my computers, do all those type of things. Probably on the low side of an expense factor. All the way up to a big manufacturing company with multiple locations, 1,000 employees, right? That expense factor is going to be high, right? But keep in mind, when you look at the revenue from the businesses, you'll see the ones that really kind of make sense, right? Big manufacturing could have 2, 3, 4 million a month going through there. 90% expense factor or 10% income factor still is a lot of money to qualify on that, right? It's really the ones that really kind of have a little discussions, understand the 30, 50, 70 on our standard expense factors. So the more information you give us on the questionnaire, the better able we have to understand it and provide that. Because we understand that all businesses are not run exactly like, right? There's some business owners that are probably more conservative. Some want to really expand and maybe have a little bit higher expense because they're doing more marketing, those type of things. And we want to treat each application on its own merits. So some of the important data points are location or locations. Do they work from a house? Do they have multiple locations in their rent? Business type, service, manufacturer. Do they have a whole bunch of inventory or cost of goods sold where they grab inventory, they have to buy inventory, do something with it, and then resell it? Number of employees. Employees are a big expense. So you kind of see most businesses run. And then the brief description of how the business operates, right? Again, that'd be like, hey, they receive money from Square, Venmo, PayPal, plus checks on this, or they use credit cards, receipts, all those different things of how they get paid. Maybe wire transfers in. Really helps us out on underwriting that file up front for you, right? So here are some of the challenges that we see. Not all is like this, right? is the information on the questionnaire that we receive does not match when we look up the business website or the Secretary of State website, right? And that's probably one of the biggest factors in non-QM, or the manual underwriting, is that you go in with the story. Here's what we're trying to accomplish, and then you get documentation that doesn't reflect that story. That's where you have to explain it, and that kind of stuff. It gets off that. The more you can get up front of what it is, it goes through really quick, really smooth, right? Already talked about the multiple revenue receipts, right? And then not all business owners with similar operate with the same expense factor. We totally understand that. Now, if the standard expense factor we go through doesn't work, we do allow you to use a tax accountant that they have for the expense factor, right? So they can write a brief letter, have reviewed the last 2 years' tax returns, and the business expense factor has averaged 38.5% over the last 2 years. That comes in from that, that's acceptable as well. All right, so let's take a look at some of the technology we have, and I'll pass it off to you, Andrea, and have Sarah, our marketing director, kind of demo how you can do this on your own through our portal once you're approved with us, and get an answer back typically the same day, right? So let's take a look at this.
Okay, awesome. Thank you, David. So thank you, Sarah, for joining us today. Everybody, as I mentioned, we have Sarah Walker on. She is our Director of Marketing here at Home Express, and she is going to do a brief demo, and we're going to just briefly look at the self-employed questionnaire, how to upload bank statements within XConnect, and then that preliminary income desk worksheet that you'll get after the income has been analyzed.
Okay, so this is the self-employment questionnaire form. And typically when you're doing a non-QM alt doc loan, if you are dealing with a borrower that is self-employed, you're going to want to grab this form as you're going through the loan application or the initial discussion with your borrower. Is the information that's supplied on this form is so important because it just tells the story about the borrower's business, and it helps down the road throughout the loan process to have a better understanding of how the borrower runs their income through their business. And the more information that's supplied in the beginning about that, the easier the underwrite is. So it's not a long form, as you can see. It's not going to take you very long. It also helps to kind of get the conversation going with a borrower to peel back the onion, if you will, on what their business is and how they earn their money. Sometimes people are a little guarded when you start asking them those very detailed questions. But when you approach it in this way and let them know that, hey, this is just going to make the underwriting process easier. We can tell me how you run your money through your accounts, basically. So this one is a sample that we did. This particular borrower used to be a professional football player. As you can see, he has since retired from the NFL, and now he has started his own youth coaching business where he teaches young people about football. Mr. Greider briefly talked about mentioning on this form how borrowers earn their income, like and what are the logistics of that. So some people are paid via Zelle, some people use Venmo, some people use PayPal, some people have Square. So you really want to get into the details of the type of business that your borrower has. And the reason that is it makes a difference in underwriting when we're going to assign the business expense factor. If you're not going to get a CPA letter that has a specific expense factor on it, then we will assign one in underwriting. And the 15, 30, 50, 70, 90% that's used is going to be based on the answers on this form. So if you say on your form, paid via Zelle, via Venmo, the underwriter will automatically go look at the bank statements and look for those deposits and know, okay, that's business related income. We're going to use that income. The percentage of the business that the borrower owns, also very important. If the borrower owns 50%, half of the income in that account belongs to the borrower, not all of it. How long the business has been in existence, and if the business manufactures products. So if a business is a manufacturer type of business, they have to buy materials, right? So the cost of goods is a little bit greater for those types of businesses. Inventory. Does the business buy and then resell product? That means inventory. So if a borrower has like a retail store where they're buying inventory and then stacking shelves, waiting for customers to come in and buy, you're going to have a little bit higher business expense for those types of businesses. Inventory we just discussed. And then here's just some basic information about where the business is located. Sometimes people use mailing addresses rather than their home address. If they're a small business of one and they put their home address on everything, maybe they use a PO box at a UPS store. You want to put that information here so that if there's another address that pops up somewhere during underwriting, the underwriter can just go back here and refer to it. Location rent. This obviously has an impact on your business expenses, right? If somebody, again, has a retail store in a strip mall and they have to pay, triple net on their lease, their business expense is going to be a little bit higher. And then the number of employees. This also makes a difference in your expenses, because if you have employees, you have to pay, sometimes you have to pay medical insurance, you have to pay benefits, there's workman's comp insurance, there's other expenses that are attributed to having employees. And then lastly, either who the interviewer is, or if the borrower filled it out, who prepared this form. So keep this form on your desktop, because regardless of, what you're doing with that loan, if you go through this interview process with the borrower, it just makes things a lot simpler down the line. You already have these notes. You can always refer back to it if something comes up, trying to get that clear to close on that loan. I do have a few samples of some income worksheets from the income desk. Oh, let's do the income desk first, actually, right, Andrea?
Yes.
Okay, so here's our portal, right? I'm in a registration already. You have to price your loan first when you're in our portal. Once you price it, then you can register the loan. At registration, we don't disclose, so you can register as many times as you want, but you do have to do step 2, registration, in order to do the income desk right here. So select income desk review. Okay, I already have this started. We're doing XYZ business football account. That's the account that the borrower has provided that we're going to do the income analysis on. And it's really very simple. It's what type of account are we doing? Are we doing business or personal, or are we using a combination of both? Yes, you can use a combination of both. And you can also use more than one account. So don't feel restricted if you're talking to the borrower and they say, oh, I have 5 business accounts that I use. The poor underwriter is going to have a job ahead of them, but we can use all those accounts if the borrower uses multiple accounts. Typically, if you're in the beginning, like pre-qualification stage of the loan, you want to get as much income as possible, because you want to see the borrower's, clear, full picture of how they're earning their money and how they're running it through their accounts. Okay, we're going to upload the questionnaire here. So you grab your self-employment questionnaire that you just filled out with the borrower, and then you just start uploading. Just start doing your bank statements. Now, one thing I want to remind everybody, you have to have all the bank statements. If you don't have all the bank statements, you won't have a clear full picture of the borrower's income, number one. Number two, it makes the job of the person at the income desk a little bit harder because they have to do it twice. So always, always, always try to get all of your bank statements in the very beginning.
Sarah, just while you're doing that,
Sure.
if you find that you start uploading the bank statements and you don't have them all, you can save your work by clicking the finish later, and then you can come back to it again. So don't worry that you'll lose whatever you uploaded in this step.
Yeah, it's not going to go anywhere. And even if you wanted to, if you get the income analysis back and it's not enough income, and then you have another conversation with a borrower and they say, oh, well, I have another account, you can always go back into your registration and add a second account. Okay, so you just hit submit for review. Submit account for review, yes. It asks you, do you want to do another account? You say yes or no. We're not going to do another one at this time. And then it takes you back into your registration. So you can always go back in here and you can see it'll show right here, pending. When the income desk review is complete, this will say completed. So the process is, once the income analysis is done, the income worksheet gets sent to your account executive. So hopefully your account executive gives you a buzz and says, hey, we got the income analysis back. Do you want to go over it? Do you have any questions on it? Let's take a look and see what one looks like. So here's what the income analysis worksheet basically looks like. So this particular one I wanted to use because this one has some transfers, right? A lot of people transfer money between accounts, and that's really one thing that you want to look for on the income analysis are the transfers, because as you can see on this one, for example, this was a big transfer, August of 22. That's almost all of the deposits for that particular month. The reason lenders don't use transfers as income is because you can transfer money back and forth all day long in between your accounts, and that's really not earned income. You're just moving money around. So if you get your analysis back and you see that there's a lot of transfer activity, you really want to have that conversation with the borrower and ask them, where is the income that you're earning from, your football coaching? Where are you putting that? Because sometimes it's like a puzzle. You have to try to find, where the original account is. So this is just a very good example of, here's all of our deposits. Here's our transfers that we're not using. One-time credits is like if somebody returns something to a store, it's not really income. Loan proceeds, we don't see this that much anymore. This was used quite a bit often during COVID, and people were getting PPP loans and things like that, but sometimes we still see it. And then NSF count, you just want to keep your eyes on that because most lenders do have a guideline when it comes to using bank statements that there can't be multiple NSFs. And then the final column here is your qualified deposits. Now over here is where the expense factor comes into play, right? So this one, we use a 30% expense factor based on the self-employment questionnaire. And then how many months we're using. We can do 24 months. So sometimes you will have 12 or 24. And then the percentage of ownership that the borrower has in the business. It's not always going to be 100%. So you always want to double check the numbers over here. And then finally, your total income. So your total income, this is what you're going to want to put in your software, whatever LOS you're using to process your loans. This is your monthly income that you're going to want to use right here. Does anybody have any questions on transfers or how this works, or the waterfall down here of how we determine the final monthly number that you're trying to qualify your borrower at? If you do, just let us know. The other account, this is a business account. The other account I wanted to show you guys is a personal account, right? Because we can use personal accounts as well. This one was somebody's personal account. And we are using 24 months of this one. So as you can see, it looks like this borrower had paid themselves out of their business. They either transfer the money or they pay themselves a check, however they do it. Hopefully you already have those answers from doing the self-employment questionnaire. And then the bank statements will just align with the story that you spoke to your borrower about. Just take a look for consistency. Really, when we're doing bank statements, the crux of a bank statement loan is consistency. Consistency in deposits, consistency in the monthly deposits, because consistency in the amount of the deposits. If you're looking at, 12 or 24 and you see 1 month, there's $200,000 more in deposits, that's when you probably want to ask the borrower, hey, what was going on that month? Since this is a personal account, when you come over here to the side, you see that we're not using any expense factor. And why is that? Well, because if it's a personal account and somebody already has a separate business account, it's assumed that they are already running their business expenses through that business account. So when we're doing a personal bank statement loan, we typically will use 100% of the deposits. So again, back to the self-employment questionnaire. That's why it's very, very important for you to know how the borrower runs their money through their accounts. And here's your total income. This is the number you want to punch in and use to qualify your borrower. That's it, Andrea. Those were
Excellent. I'm so
income
happy you
worksheets
came. That was
that
wonderful.
we had. Well, thank you for having me.
Oh my gosh. Well, now you're now you're hired, Sarah. You'll be back.
Okay. Thank you.
Excellent. Thank you. Welcome back, Mr. Greider. Let me
Yes.
get
I think
some
there's some
control
good
back.
questions on here. And anybody that's approved with us, who has the portal, you can go do this on your own and the steps for all this. I always recommend get with your account executive to kind of go through that, especially the first 3 to 5 if you haven't done them. But you're able to upload these and get this reviewed by the income desk prior to submission, prior for them looking out there in the market for a house. Maybe we're dealing with real estate agents and that they want to know, are they really pre-qualified, right? You can do all this, and it typically takes from 4 hours to 24 hours, depending on when you upload it and what the workload is for our income desk underwriters for the day, right? Typically right now we're probably doing 30 of these a day, thereabouts when I do that, and we'll put more resources on there if that gets to a level we're getting 50 or so or 60 in a day. We'd have to add resources to that, but it's fairly quick and you'll get an answer typically by the next day. I'd say within 24 hours. Could be if you do in the morning, get it later in the afternoon or the next day. So we kind of demoed that. I'll let you kind of just go kind of through the sections here, Andrea.
Yes, thanks, David. So the very last thing that everybody will see on the demo screen is the XConnect portal guide for brokers, and that's kind of a teaser. So we do have a portal guide that will help you upload those bank statements, just like Sarah mentioned, and it's actually it's a really robust guide that helps you with every single facet of the XConnect portal. We send that to approved brokers. So if you are an approved broker, wonderful. If you can't find your portal guide, reach out to your account executive, reach out to myself, and we can get one to you. If you are not currently an approved broker, we would love to have you become an approved broker, and I'll show you how to do that in a moment. And you will get the XConnect portal guide in your welcome packet. So with that, let me go ahead and get to the next screen. We have some questions. We did have a couple questions come in. David, you already kind of answered some of them. Yes, everybody will receive a copy of this PowerPoint and the recording. So David, I see a couple questions in the chat, kind of from the beginning, talking about cash deposits. Are cash deposits allowed?
Yeah, as long as we understand that nature of it, right? Is like it's going in, it's consistent and predictable, right? So if they do a job and they get paid cash, they go and they deposit into their bank statement, right? And that's one of the ways they get paid, and it's consistent and predictable. Yeah, that'd be fine, right? Typically, it's like you pay your rent in cash, right? That's hard to verify on that condition. Right now, we're looking at the income side of the business owner to get it qualified, and cash deposits, as long as they're consistent, going through there. Maybe someone's 1099 and gets tips consistently. They get paid by check, then they get an extra $200 in tips. Well, I've moved recently, right? So I wrote a check out for the movers. Oh, by the way, here's a few $100s as a tip for that business owner. Probably deposits that in, or sometimes they don't. They don't deposit, I can't include it, but they deposit in there, and you see that historically, that they get that historically. That's a good reason that'd be predictable to go in the future.
Great, thanks, David. A couple more. What's the difference between a standard expense factor and a non-standard expense factor?
Great question. The standard expense factors, that's something we have in our internal guidelines, right? Based on the business type it is, the location, how many employees, and that type of thing. So on the scale towards the low end of 15%, that's typically very few employees, home office. We can just tell that they have limited expenses. And then it just keeps on going up from there based on the business type, employees, number of locations. That's why that, as Sarah said, that questionnaire is very important for you to fill out to apply the right standard expense, right, that we have internally as far as our guidelines, all the way up to that 90 when that's your big manufacturing company, cost of goods sold, 1,000 employees, right? But those are actually pretty easy to qualify because it's 90% expense factor, 10% of a $2 million monthly average receipts is $200,000 worth of income, right? So that's probably closer to 95. But we put that to make it easier for you as dealing with your borrower that you have on there, get them qualified. Now, if it doesn't quite fit there and you think it's different, and underwriter, we say, hey, this is typically what it is 50. Well, you might have some disagreement. You can actually go there and say, hey, let's go the case of why it should be lower. You can go that way, or you also have the ability to go out and get the CPA or tax accountant letter. Doesn't necessarily have to be a CPA, it could be an EA that can do the review of the tax returns over the last 2 years and provide expense factor letter. And
Excellent.
That's what we'll use.
Thanks, David. Another one, do you do owner occupied on 3 months non-QM bank statements?
Owner occupied 3 months. Now our 3-month program, and I cover this, is really a P&L program. So the difference between a P&L only and a 3-month business bank statement with a P&L actually allows you to go to our maximum LTV. Right, so we could use a P&L, and our P&L program is strictly for CPA has to do that 2-year P&L. Does not have to be audited, but it has to be provided by the CPA. Could be based on what the business owner provides, but it's got to be compiled by that CPA. If you have 3 months bank statements, so it's within a 10% range of that average business revenue coming in, we can then go max LTV. P&L only has reduction to the LTV. So kind of keep that in mind. That's just to enhance it, because you might need a 90% LTV loan and you're trying to do the P&L method. Well, if you get 3 months, the last 3 months, that's very similar to that P&L. That's fine. So that's really what that 3-month program is. It's coupled with that profit and loss statement.
Excellent, thank you. And I think the last one is asking about what's the matrix for the bank statement loans, LTV for owner occupied, LTV for non-owner occupied. So
isn't there a program guide at the end of this that they get on the presentation? Right, so you'll see it, right? So you'll see our consumer purpose, we go to 90% on bank statements, right? On our non-owner occupied, we go all the way to 80 LTV using bank statements, or you could do DSCR on business purpose as well. But we do have a matrix that we'll provide on the stack to you. And I think it's the last page has a product matrix for you.
Exactly. Thank you. And we're 45 minutes in this. I mean,
Wow.
it seems like it's flown by to me, but that's actually a perfect question to kind of wrap it up here, because not only will you get this deck that has a program guide at the very end of it, but also you can go to our rate sheets on our website. So we have our website listed right here, homexmortgage.com. This is showing you, like I had mentioned, how to become an approved broker. You can just come over here and click broker access and go through to broker approval procedure. But if you click on programs and rate sheets, every single matrix and rate sheet is listed for all of our products. So feel free to click around homeexpressmortgage.com, and actually we have a great section for all of our previous webinars that we've done on our website as well. So Mr. Greider, thank you once again for your time. This has been a great time together today. As all of you know, if you've been coming to these webinars, David Greider loves to get phone calls. He loves to get emails. So here you go. Feel free to reach out to David Greider. Feel free to reach out to myself or anybody in marketing for more information. But like I mentioned, everybody will receive a copy of this deck, the recorded presentation. So feel free to reach out to us for any questions. So thanks, David, for your time. Thank you, Sarah, so much for your time. Really appreciate it. You're on the hook now for future webinars, just so you know. Thank you, everybody, for joining. Have a great day. Happy August. We'll see you next month. Bye.